John Osterweis, we've got global terror in the headlines, a Fed rate hike supposedly on the way, a skittish consumer based on some recent retail earnings we've seen. So what should investors be thinking as we head into the end of the year and 2016?
I think you have to focus on what's really happening, what the big trends are underneath. I think the terrorism is episodic. I think we will have a long-term issue with ISIS and other like-minded terrorist groups, but that's not going to drive the economy. I think the pending rate hike has been talked about endlessly. At some point, the Fed is going to have to raise rates, but given the low inflation, the Fed has no incentive to throw the economy into recession. So our view is that rates will go up, but they will go up at a very moderate pace. Basically back to a more normal level, which I think is probably already discounted in the market. The consumer has been weak recently. We don't know how much of that is weather and how much of that is some more fundamental shift. But I think basically the U.S. economy continues to expand. Inflation remains low. We're still the best economy in the world at this point. And so I think investors shouldn't be overly skittish about the outlook for 2016.
All right, well, one stock you like over at the Osterweis Funds is General Electric. Now, GE finally broke that $30 mark. It hasn't been there since 2008. So what takes it past 40?
What I think is going on at GE is very simple. They built a big finance division. They're basically liquidating that, taking the cash. They'll be buying back stock, and they'll be focusing the company very much on the industrial businesses, which are superbly run. And as those businesses grow, I think the stock will gain a greater and greater following, and I think the stock will work.
And you're also bullish on Alleghany Coporation. It's up around 8% year to date. They're in the insurance business, more property and casualty and reinsurance than the mergers we've been seeing in the healthcare sector.
Right.
So what takes Alleghany up?
Alleghany is a very well-run, very conservatively managed company that underwrites to a profit, doesn't chase volume, and very quietly tends to grow its book value 8 or 10% a year, and that will continue to push the stock up over time. There'll be hiccups, of course, but the company is well run on the insurance side. They're making interesting investments on the non-insurance side. Book value continues to grow, and it's one of these stocks that will quietly march forward over time.
All right, and then finally, you are positive on EPR Properties.
Yeah.
This is a REIT. They're in the entertainment arena. They own water parks, some education facilities, pays a nice 7% yield, but it's down 5%. So how will it do if there actually is a problem with the consumer brewing in the economy?
It will probably do just fine because it's leasing movie theaters and amusement parks and schools, charter schools. All those leases have little escalators in them. The consumer tends to go to the movies during weak economic periods. So I don't think the movie theater business is going to suffer if the consumer is weak. Amusement parks are local, so they tend to do okay even in weak environments. And of course, schools are schools. So our view is this company will continue to grow by adding new facilities, and their credit history is great, so we don't expect them to suffer credit problems. And with almost a 7% yield growing, I think the stock should do fine even as interest rates move up modestly.
All right. Thanks a lot, John.
You're very welcome, Craig.
And thank you for watching The Street.